Investors are again speculating about the pace of the key interest rate hike by the Fed. Yesterday, the US published its inflation report, which intensified expectations of a 50 basis point hike in December. Notably, in October, the consumer price growth slackened to 7.7%, reaching the lowest level since January. Against this backdrop, the US dollar slumped at the fastest pace since 2008. In our video review, we are going to find out what events will shape traders' sentiment early next week. Only on Tuesday, traders will start learning important information. Japan will launch a news flow by disclosing its GDP data for the third quarter. The preliminary estimates will allow traders to evaluate the condition of the Japanese economy amid high inflation and ultra-loose monetary policy conducted by the Bank of Japan. The local monetary authorities are trying to prevent the falling yen from even a deeper drop by means of currency interventions. According to the forecast, the Japanese economy will continue growing despite all the mentioned factors. It's highly possible that the actions of the central bank already bring in positive results, thus such information may support the national currency. The Reserve Bank of Australia has also switched to a less aggressive stance. Nevertheless, politicians are still making quite hawkish announcements about the intention to raise the benchmark rate at a high pace, ignoring the risk of a recession. In fact, at the last two meetings, the Reserve Bank of Australia increased its key rate by only 25 basis points despite the higher ever inflation and GDP growth. Thus, the regulator's more dovish stance may result in a sell-off of the Australian dollar. However, data from China will affect the currency more than other factors. According to the forecast, in October, industrial production of China, which is the main consumer of Australia's raw materials, will show slower growth of 5.2% on a yearly basis. Only in September, economists reported the biggest rise since February. However, the Chinese authorities are still closely monitoring the epidemiological situation. Any new virus case causes concerns about a possible pause in the recovery of energy consumption. However, the real data could exceed pessimistic forecasts like it was in the previous months. During the European session, traders will continue learning information about the condition of the main global economies. The UK is going to report its labor market situation. In October, the number of unemployed claims is likely to increase by 27,000. At the same time, the unemployment rate is likely to rise gradually. Thus, in September, the indicator may return to 3.6% after a drop to 3.5% in August. In this light, the pound sterling may enter the overbought area. On Tuesday, the euro-dollar pair may also bounce due to some fundamental factors. The consumer sentiment in the Eurozone's largest economy is modestly recovering after a slump to the 14-year low. It's possible that in November the indicator will climb to the level of 55 points. However, investors are unlikely to become positive amid high prices, the approaching energy crisis, and the risk of a recession. On Wednesday, the US dollar will receive more reasons for recovery. The US is going to disclose its consumer price index data, which is one of the main reports. The forecasts are extremely pessimistic. Inflation may accelerate to 10.8% or even higher, to 11%. The Bank of England has already switched to a more aggressive stance by raising the key interest rate by 75 basis points. This, in turn, is boosting the risk of a recession. However, such measures have not brought any results yet. Apart from that, UK Finance Minister Jeremy Hunt intends to set out tax rises and spending cuts totaling £60 billion. Meanwhile, the US has somehow managed to cap inflation after investors were encouraged by the news about the US inflation slackening. Canada may also report a slowdown to 6.2% from 6.9%. In this light, the Bank of Canada may take a pause in a key interest rate hike, thus allowing traders to close their buy orders on the Canadian dollar. However, the publication of the US retail sales report will be the key event of the next week. Notably, consumer spending comprises about 2/3 of the US GDP. It means that this report accurately determines the main trend in the US economy. Economists suppose that consumer activity may increase after stagnation in October. Retail sales may climb by 0.8%, encouraging traders to buy US assets. You have watched Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading and have a nice weekend, and see you on Monday.